Business of Property podcast. I'm Simon, and I've been investing in property for over 20 years. And if you're an active landlord or planning your next property investment, this podcast is for you. As we start April, this week is, of course, my monthly property market update, covering data from March and looking ahead a little bit to the rest of April. Before I get into the latest PATMA data, though, I want to mention the latest transaction data from HMRC. Now, this data is looking at February, so it's a little bit older, and it is counting completed sales, or at least an estimate of them, and using stamp duty submissions. The exact numbers are, as I mentioned, just still provisional, so they're estimated at the moment for February, but they expect a 24% increase in the number of sales compared to February 2025. Now, rather than just a naturally busier market, they give credit for much of this increase to people rushing to beat the stamp duty increase that has now happened at the start of April. It'll be interesting to see, I think, how that is looking in the PATMA data as well, and whether I sort of agree with that sort of attribution, really. So moving on to the PATMA data. We're a bit more current, of course, and this data covers up to the end of March. So we're just a few days past what it's covering. And the rate of new properties coming onto the market has slowed a bit sort of during March. The peak of new properties, although sort of 4 weeks ago now, was, I think, a bit late to try and catch the lower stamp duty, trying to put a property onto the market and expect it to sell and complete in a month is very optimistic. So I don't think the reduction is due to that, really. I think it's just about a natural ebb and flow of the market, rather than people dropping off now because they don't think they can sell due to the increased stamp duty. Looking at average monthly new listing prices, March 2025 is at $342,507 for a 3-bed property, and that's £4,884, or 1.4% up from March 2024. So that I think that's in line with most of what other places are saying in terms of changes in the market and annual increases that we're seeing. Of course, this is listing prices, and it's specifically new listing prices, so before any reductions or anything have come into play. So if anything, it might be slightly optimistic compared to actual sales prices, but I think it does seem to be roughly in line. Now, looking at the number of properties that are selling each week, and it does obviously fluctuate a bit just through chance and things, but overall, looking back over the last few weeks, I think it does seem to be holding fairly steady, with no obvious dip as the stamp duty increase has approached. So I think that's sort of the most important bit of this data, which to me would suggest that it's looking good for the market going into April. And if sales have still been happening in the last month, so during March, then those sales are happening with the expectation that they'll be paying the new higher stamp duty rates. And hence, the fact that they are still happening at about the same rate, I think suggests that the market is looking good, and it's a promising sign for the market continuing into April and hopefully beyond. Coming on to price changes, and during March, 19% of listed properties saw a price reduction. In March 2024, this was 18%, and in March 2023, it was 17%. So March 2025 does feel a little higher. Well, it is a little higher. So perhaps with sellers and agents trying to push the market up slightly faster than buyers are willing to go at the moment. If they are, though, I don't think it's by much, as the time to sell has continued to fall during March. Historically, March is the seasonal low point for this metric. As you can see in the graph that's on the screen, if you're watching on YouTube, then you can see the very clear seasonal pattern over the last couple of years. And each year, March is the sort of low point in the number of days that an average property will be listed for before selling. So we might see this figure edge up a little in April. That would be the likely pattern, but probably only by a very small amount. Right now, properties that sold in March had been listed for an average of just 57 days. Again, that is very slightly higher than the 55 days for March 2025, but it's such a small difference. I don't think that's very significant. And 57 days is still a lot lower than it has been recently. And hopefully that's, again, another good sign that the market is doing well, and we haven't seen a drop-off from the market due to the impending stamp duty changes, because that number has continued to fall during March. So far, we've not seen a big spike in properties falling through either. So again, this is a bit of a concern as the stamp duty deadline approached, or perhaps an opportunity if you're an investor of a certain mind. But it doesn't seem to have come to fruition, at least not yet. So hopefully this means that conveyancers, agents, brokers, and all those involved have done a good job at getting sales over the line in time. Or buyers and sellers are deciding to cope with the change and keep their transactions alive despite slightly higher stamp duty when that's the case. Of course, people might have been running up to the wire and fallen through at the last moment. And those fall-throughs will only be coming through this week. So they won't quite have made it into the PATMA data that I'm looking at now, or the data obviously in March. So there may yet still be a small spike, but given the other data and the sort of generally promising market, hopefully it won't be too big and there won't be too many of those fall-throughs catching at the last minute. Finishing up with a very quick look at the rental market. A 3-bed listing average was £1,589 in March 2025, compared to £1,547 in March 2024. Now, that's an increase of £42 per month in asking rent, or 2.7%. So it's a much steadier growth level than some recent years for rental prices, but still a higher growth rate than sales listings. So I think it is a positive sign, and it shows that there, despite the very rapid rental growth rates in the last few years, there is still potential for the rents in the market to gradually edge up still, roughly in line with inflation. So that's all for this month's quick property market update. I hope you find it useful to stay current with the latest data. And please do remember that you can get free weekly updates if you subscribe to the Business of Property emails. Details for that are, of course, in the show notes. Thank you very much for listening, and I look forward to speaking to you again next time.